Ever thought about the invisible threads connecting your money to the past? Today we uncover the historical milestones that continue to influence our financial choices and realities. Buckle up because we're going on a ride that takes us quite a ways back. Let's rewind our clock to an era of daring voyages and uncharted territories, the age of exploration and colonization. Spanning from the 15th to 17th century, they witnessed fearless explorers setting sail in search of new lands and untold riches. It all began with a thirst for discovery. As European powers sought to find new trade routes to the east, their voyages connected distant lands and cultures, paving the way for global trade networks that continue to shape our world today. New resources and goods poured into Europe, enriching nations and transforming economies. Spices, silks, and precious metals changed the way people lived, introducing exotic flavors and luxury items to the masses. But alongside prosperity came the darker side of colonization. The establishment of colonies often involved the exploitation of natural resources and the subjugation of indigenous populations. As empires expanded, so did their financial and political power. European countries established vast trading networks, leading to the formation of complex financial systems and institutions that laid the groundwork for modern economies. Today, the impact is still unmistakable. It doesn't only change the food we eat or people around us, it has far-reaching consequences. The influence of the European languages, cultures, and legal system can be seen in regions across the world. Trade relationships established during this era continue to shape international commerce and economies, with some nations still dependent on exporting natural resources inherited from their colonial past. Fast forward a couple centuries, and the world is again ready for a change. At the close of the 18th century, radical transformations are about to propel humanity from agrarian societies to a full-blown industrial powerhouse, forever altering the way we live and work. The Industrial Revolution took the world by storm, fueled by groundbreaking technological innovations like the steam engine. Factories started popping up, driving unparalleled levels of productivity and economic growth. This new era brought a massive shift in the workforce, as people migrated from rural areas to burgeoning cities in search for better opportunities. While industrialization improved living standards for some, it also led to concerns about workers' rights and labor conditions. Capitalism emerged as a dominant economic system, promoting private ownership and free markets. Entrepreneurs and inventors sought to revolutionize industries, creating a web of interconnected enterprises that laid the foundation for modern capitalism. The Industrial Revolution accelerated globalization, connecting continents through trade and transportation. It ushered in a new era of innovation. The technological advancements made during this period continue to influence modern industries, from transportation to telecommunications and beyond. The Industrial Revolution transformed society. It brought prosperity and challenges. It's etched into the fabric of our daily lives and shaped our modern-day economies. The Industrial Revolution's enduring impact on investing is seen in the shift towards innovation-driven industries, the pursuit of diversified portfolios to manage risks in rapidly changing markets, and the recognition of the importance of long-term thinking and adaptability in navigating the dynamic business landscape of today. Let's skip ahead to the year 1870, another fascinating chapter in monetary history. The gold standard emerged as a system that held the world's currencies in a golden embrace, anchoring economies to the allure of this precious metal. This fixed exchange rate system brought stability to global economies, assuring investors and traders that their money had real value. Nations accumulated gold reserves as a sign of financial strength, establishing central banks to manage these reserves and control monetary policy. For centuries, gold coins and bars served as a medium of exchange, with the precious metal being widely accepted in international trade. However, the rigidity of the gold standard posed challenges during times of economic turmoil. The inability to adjust currency supply to match economic needs sometimes exacerbated the financial crisis. Amid the global turmoil of the early 20th century, countries began to abandon the gold standard to gain flexibility in monetary policy. The gold standard's demise paved the way for a more flexible, fiat currency system. But even today, in times of uncertainty, many investors still turn to gold as a safe haven asset, seeking stability and protection against inflation and economic turmoil. It's the late 1920s. Economic catastrophe engulfed the world, leaving millions in despair and reshaping global financial systems forever. Or, as we know it today, the Great Depression, triggered by the infamous Black Tuesday stock market crash in 1929, fortunes vanished literally overnight. A panic set in as investors rushed to sell their stocks, causing a devastating market collapse. As businesses shuttered, unemployment soared. Poverty gripped nations, leaving many families struggling to meet basic needs. The Great Depression brought immense suffering, testing the extreme resilience of societies worldwide. In response to the crisis, governments took unprecedented action. The United States introduced the New Deal programs aimed at providing relief, recovery, and reform. These measures marked a turning point in the role of governments in stabilizing economies. The Great Depression's profound impact led to significant changes in financial regulations and monetary policies, designed to prevent future crises and protect investors and consumers alike. Even decades later, the lessons learned from the Great Depression continue to influence economic policies, prompting governments and financial institutions to be vigilant in mitigating economic risk. The Great Depression's lasting impact on investing is evident in today's risk-conscious approach, strengthened investor protection measures, and vigilant government interventions to safeguard financial stability, ensuring a more resilient and secure financial landscape for individuals and economies alike. As the world emerged from the tumultuous period of World War II, a new era of hope and cooperation dawned. In 1944, world leaders gathered at the historic Bretton Woods Conference. In a remote location in New Hampshire, they endeavored to establish a new international monetary order. The agreement sought to foster cooperation and stability among nations, with the overarching goal of preventing a return to the economic chaos of the interwar period. Under the Bretton Woods system, currencies were pegged to the US dollar, and the US dollar was linked to gold at the fixed rate of 35 per ounce. This approach ensured stable exchange rates, facilitating international trade and investment, and laying the foundation for an era of unprecedented global economic growth. The Bretton Woods system served as a beacon of hope in the aftermath of conflict, promoting economic prosperity and cooperation. Nations embraced the fixed exchange rates as a means of providing stability and certainty to their economies. The establishment of the International Monetary Fund and the World Bank aimed to promote monetary stability and facilitate post-war reconstruction. However, over time, the Bretton Woods system faced challenges. Economic imbalances and the growing US dollar reserves strained the system's sustainability. At the start of the 1970s, the world witnessed a seismic event, the Nixon Shock. In August 1971, the United States decided to suspend the convertibility of the US dollar into gold. This historic event severed the direct link between the dollar and gold, marking the end of the Bretton Woods system. The era of fixed exchange rates dissolved, giving way to the emergence of a new era of floating exchange rates and fiat currencies. We're in the late 1990s, entering the 2000s, a time when the world was captivated by the promise of the internet. As companies mushroomed with boundless ambitions, and investors chased dreams of overnight fortunes. The dot-com bubble was fueled by an explosion of internet-based companies, each seeking to revolutionize industries and capitalize on the digital age. Speculative investments in dot-com stocks soared, igniting euphoria in the stock market. Investors believed the internet's limitless potential would lead to unimaginable profits. But alas, the bubble couldn't defy economic realities forever. In the early 2000s, reality hit hard, and countless dot-com companies crashed, wiping out enormous amounts of wealth and dreams. As companies collapsed, jobs were lost, and investors faced severe losses. The dot-com bubble's impact rippled through the economy, leaving scars that served as a cautionary tale for generations to come. The dot-com bubble burst led to significant regulatory reforms and risk management strategies aiming to prevent such exuberance and excessive speculation from destabilizing markets in the future. While it was a sobering experience, it also brought valuable insight. It highlighted the importance of sound business models, strong fundamentals, and long-term vision in the tech industry. Today, we navigate a digital world shaped by these lessons learned from this remarkable era. Reflecting on the historical events we've explored, it becomes evident that each chapter in history is like a thread, intricately woven into the tapestry of our modern financial world. While we can't put any actual monetary values on each individual event, or see how it would impact each of us personally, it's clear that there is a significant change between then and now, that odds are you and I wouldn't exist without it, and we certainly wouldn't be able to connect like we do today. The age of exploration and colonization opened pathways that connected distant lands, giving birth to the global trade networks that bind us. The Industrial Revolution brought with it a cascade of innovations that ignited progress and transformed societies. The gold standard taught us the allure and limitations of tying currency to tangible assets, while the Great Depression showcased the strength of human resilience in the face of unimaginable hardship. The dot-com bubble, with its exuberance and lessons of prudent investing, unveiled the potential and pitfalls of the digital age. These events, separated by time, have shaped our financial world, guiding us through the complexities of the present. In today's world, the recent COVID era further illustrates the dynamic nature of our financial landscape. The sudden rise of work-from-home arrangements showcase how we adapt and find opportunity, even during adversity. Looking to the future, we understand that not every decision will result in financial success. However, understanding where we come from empowers us to make wiser choices as we navigate uncharted waters. Our journey through history reminds us that progress isn't linear, but rather a continuous exploration, propelled by innovation and spirit of resilience. As we stand at the crossroads of the future, we carry the wisdom of the past. Let us embrace change with open minds and collaborative spirit, for the challenges we face today will forge the foundation of a brighter tomorrow. Thank you for watching. Make sure to like the video if you enjoyed it, and subscribe to the channel for more content like this and financial tips.